Let's break a common belief amongst the NRIs, which holds them back more than their salary could. That making wealth, the real wealth, is measured based on the amount of money that you earn. It's not. It's about knowing how to utilize your money each month that comes to you and structuring it in a way that builds your financial freedom. And some of the NRIs don't even realize they have skipped past to the third stage, where you've lost your potential of creating that wealth. And we're going to break it down structure by structure. That way you get a clear understanding of how you can structure your expenses and manage your money and build that financial freedom that gives you long-term prosperity. Stage 1. This is the boring bit, but you have to, and this cannot be skipped. This is where you build your stability. Stability is tracking your expenses each month, creating a budget, and putting aside money to cover your monthly expenses. Knowing what you have to spend each month itself is the biggest win, because when you understand your outgoings, you will know exactly how much you're left with, and that gives you the idea of how you can utilize that money to build your wealth. Create a budget plan, structure it in a way, and understand when and what you can anticipate each month, and put aside this money, and that gives you the freedom to go into the next stages of your wealth creation. This is the most mundane task, and you will be focusing at your day-to-day expenses. You will be considering about your emergency fund, which is an absolute necessity, because once you've built that emergency fund, it gives you a sense of freedom. Seeing that £10,000 or £20,000 sitting in your bank account earning interest each month itself gives you that freedom of not worrying about what might happen if something goes wrong at that point in time. You're well organized and you're well prepared for anything that life throws at you. You're making zero panic decisions. If you get this wrong, and if you're constantly worried about cash flow each month, then no matter how much you earn, you'll still feel poor. So make sure you understand what is your cash flow, where is your expenses, and what is your current outgoings. Structure it in a way, get it organized, and when you know the exact figure, you will be in a position to manage your money and be in a potential to move into the next stage of investing, which is the most exciting bit. Stage 2, which is the growth. This is where you will now start visualizing what your future is going to look like. This is where you will understand how you're going to be utilizing that money that you're going to be setting aside each month for a consistent period of time, and how you're going to build this wealth. Growth, in simple terms, means you're consistently investing, you're being patient, and you're diversifying your investment and investing into something global. This way, you're mitigating the risk factor, and being consistent and staying invested for a longer period of time, you're cutting out any risk element on that investment. This is where the opportunity cost comes in. Opportunity cost is nothing but what your money could be in 15 years of time. Deciding that right now sets you well ahead of rest of the other people who haven't even started investing. Every year you wait around to start your investment journey, then you are losing that momentum to compound your investment. Get in early. I tell every people, don't delay your investment. Get an idea. Index fund, ETFs are the safest way to invest your money, and that gives you guaranteed return, considering you stay invested for a long period of time. Remember this, ETFs and investment should be classified in your brain as an expense. Every month when you invest, consider that as an expenses, because once the money has been invested, you should tell and train your brain that you cannot withdraw this money at all. When you have that mindset, you will slowly but gradually start building your wealth, and that should give you the financial freedom. Most NRIs don't lose money in bad investment. They lose because they hold off on their investment too late. By the time when they realize it, you have lost a lot of years in compounding growth. So make sure you get in early If you're in your 20s and 30s, absolutely brilliant time to start investing. Even in your 40s and 50s, it's never too late. But starting it right now is the best time to start giving that money that momentum to grow and give you that freedom in the future. How do you build this wealth? Pick an index fund such as S&P 500, which has consistently given return each year between 8 to 10% for the last 40 plus years. You can invest into one of those. You can invest, if you're sentimental about India, you can pick something called MSCI, Emerging Market, which tracks all the Asian market, which includes India as well. It tracks some of the major companies like Reliance, Infosys, Wipro, all of those companies. So you can use that and diversify your investment. When I say that, if you've got, let's say, £300 each month or $300 each month available to invest £100 each into these index funds. That way, your money gets invested and you're tracking this using whatever the apps that are available for you to track it, and utilize the most tax efficient way that's possible in the country that you're currently living in. Out here in the UK, we've got the Stocks and Shares ISA account, which allows you to invest up to £20,000 each for you, yourself and your spouse as well. So if you earn more than that, absolutely fantastic. Go ahead, open 2 different accounts and put your money aside using that Stocks and Shares ISA and start investing. That way the money grows, and any capital that you earn from this or any returns that you make, including dividends or capital gains, these are completely tax-free. So that way you're not paying anything to the taxman when the time comes for you to withdraw that money. And that is how you start building your wealth. Stage 3 is leverage. This is where your wealth starts feeling real. Let's get this right. Leverage doesn't mean that you can take loans and invest into risky assets. This basically means the money works for you even when you're not. The investment funds your opportunities, and income is no longer the only engine, and you have more income stream dropping into that big pot. And this is the stage that everybody needs to get into. As an NRI, we tend to jump into this particular stage straight away. As soon as you start earning in a stronger currency abroad, you start thinking about, how do I go about utilizing my income? The first thing that comes into every individual is to invest into risky assets, such as properties, buying gold, and taking loans. What you're actually doing is you're trapping your money's opportunity to grow. When that happens, your potential growth is stifled. Don't get into this leverage straight away as soon as you start earning. And that is a mistake that I've seen every or most of the NRIs that I have had a chance to interact with. Because as soon as they start making money, they buy a property. I'm not saying that is not a bad thing to do, but buying a property in India with that money is the wrong thing to do at a very early stage. Go through the stage 1 and stage 2. Stage 3 is the freedom stage, which will allow you to think about buying the property that you want to buy in India. Gives you the opportunity to invest into the business that you are interested in, and your money is passively growing in the background. Your emergency fund that is sitting inside a high yield savings account is generating passive income in the form of interest. You're not only just looking at your monthly wages as your only source of income, you're looking at your investment, your emergency funds, which are automatically adding into your wealth creation. Don't skip the first 2 stages and go straight into the leverage, and that will risk and stifle your potential to grow. If this gave you clarity and idea in terms of how you can approach each of your targets, then consider subscribing. Hit that like button as well, so this video can be shared by YouTube with other members of NRI community living abroad. Thank you for watching. I'm Wilf. I'll see you in the next one.